Ladies and gentlemen, good day and welcome to Music Broadcast Limited Q4 and FY24 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashit Kukenia, CEO from Music Broadcast Limited. Thank you and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining the Q4 and FY24 earnings call for Music Broadcast Limited. Joining me on the call is Mr. Rajiv Shah from our IR team and our investor relations partner, Strategic Growth Advisors. I am pleased to share the financial outcomes of our company for Q4 and FY24 with you. FY24 was a remarkable year for us, characterized by robust growth in both top line and profitability metrics. Our revenues surged by 15%, driven by strong market demand and effective execution of strategic initiatives. This growth trajectory underscores our unwavering commitment to promoting innovation and excellence in our operations. We are delighted to report a significant expansion in EBITDA by 31%, accompanied by an improved EBITDA margin of 24.6%. This remarkable achievement reflects our relentless focus on enhancing operational efficiency and implementing rigorous cost management initiatives. We remain committed to sustaining this momentum and further optimizing our operational processes to drive profitability. One of the key highlights of FY24 was the substantial increase in inventory utilization, reaching 78% compared to 63% in the previous year. This underscores our commitment to optimizing resource utilization and enhancing operational effectiveness. We will continue to prioritize resource optimization initiatives to maximize efficiency and profitability across our operations. Throughout the year, we executed a range of strategic initiatives to fortify our position in the radio industry. Our comprehensive omni-channel framework enabled us to leverage the extensive reach of our network, delivering optimal value to our clients. The successful launch of Radio City on JioTV and the introduction of RC Studio as a 24/7 video channel marks significant milestones in extending our reach and providing advertisers with unparalleled opportunities to engage with a nationwide audience. This initiative will be pivotal in bridging the gap between different audience segments and expanding Radio City's reach to a larger demographic, creating a more inclusive and vibrant entertainment approach. We continue to prioritize our digital business, which witnessed impressive growth of 25% year-on-year. A proactive approach to leveraging digital channels for content creation, distribution, and engagement underscores our commitment to staying ahead of the curve in the evolving media landscape. The debut of Radio City on JioTV underscores our commitment to innovation and meeting the changing needs of consumers and advertisers in the digital era. We are pleased to note that Radio City remains the preferred choice for advertisers, with 40% of the industry client base selecting our platform. Additionally, amongst newly acquired clients in the radio domain, 33% have specifically chosen to showcase their advertisements on Radio City. This reflects the strength of our brand and the effectiveness of our marketing efforts in delivering value for our clients. Looking ahead, we remain committed to driving sustainable growth and delivering value to our stakeholders. By staying agile, innovative, and customer-centric, we are well positioned to capitalize on the emerging opportunities and navigate challenges in the dynamic media landscape. We thank our team for their dedication and hard work, and we are confident in our ability to achieve continuous success in the future. For FY24, revenue grew by 15% year-on-year to 228.5 crores. EBITDA grew by 31% year-on-year to 56.2 crores, while EBITDA margin expanded by 310 BPS to 24.6. Adjusted profit after tax, which is adjusted for interest on MCRPL to the tune of 7.9 crores stood at 14.7 crores. For the quarter of 24, revenue grew by 22% year-on-year to 62.6 crores. EBITDA grew by 52% year-on-year to 16.1 crores, while EBITDA margin expanded by 515 BPS to 25.7%. Adjusted profit after tax, which is adjusted for interest on MCPRS to the tune of 2.1 crores, stood at 5.1 crores. Our cash reserve stood at rupees 327 crores as of 31st March 2024. Our liquidity position remains strong, and as stated previously, this liquidity allows us the flexibility to take advantage of the present and prospective future opportunities. With this, I would request the moderator to open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manan Poladia from MKP Securities. Please go ahead.
Hello. Hi. Am I audible?
You're audible, yeah.
Yeah. Hi. So, first of all, congratulations on posting a good set of numbers. So my question is with regards to margins. Number one, the last 2 quarters or so, we've had a decent set of margins, about I think 13 and 15% or so. Is that the sort of guidance that we should continue going into the next 1 or 2 years? Is that something that we should do?
We should be.
All right. So that's my first question out of the way. Secondly, you spoke about utilization, right? What sort of utilization do we see in the next year? Can we see the same 10-15% sort of growth, or is that something more that we're looking for?
See, 10-15% growth is what is available as a opportunity area, and that growth should be there. Especially in the smaller markets, we have still scope for growth with the elasticity in the market. So yes, a 10-15% growth is something which we can be confident and positive about.
Right. And just the last question on the social media end of things, where we've been working quite hard, and that seems to be our next area of growth, right? If you could just give me some color as to how that is going, what we should anticipate in the next couple of years from that segment.
So yeah, very clearly, when you look at it, what we are doing is we are actually following the consumer journey. Now, if you today look at the media time spent by consumers, you will find that almost about 9 hours to 9.5 hours of media time spent is spent. A large part of that is spent on digital media, which includes your social media platforms, your OTT platforms, and that includes your social media platform includes Instagram, Facebook, YouTube, and so on and so forth. So what we are doing is, because we have the opportunity with us, with the content that we are creating, we are disseminating those content on third-party formats for monetization, like how we have created content and now put on GeoTV. If you look at our content distribution, it's not only happening on GeoTV, it's happening on GeoTV Plus, it's happening on GeoTV app, and also on the GeoTV Bharat phones, which potentially allows us to reach to, ideally about 475 odd million. That's one part of it. Apart from that, we're also distributing and planning to distribute both our audio and video content on third-party platforms. See, one of the strategies we have adopted is we are very clearly saying that if a consumer is going to consume content in the platforms of his choice, we as an organization will try and distribute our content to those platforms so the consumer will get the content of his choice in the platforms of his choice. So yes, you will see, just to answer your question, in the next 2 years, you will see our content distributed across various other platforms. We will be creating, we will also be expanding our influencer reach out, which we are using extensively with our RJs, and also, looking out for aggregating our external influencers and so on and so forth. So yes, there's a lot of excitement for us for the next few years from the digital space.
That's great to hear. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask questions. The next question is from the line of Ranodeep Singh from MAS Capital. Please go ahead.
Yeah, thank you for the opportunity. Just wanted to understand, I think pre-COVID 2019 is when we saw peak revenue. I think standalone 325 CR, right? And now we are averaging around 50, and I think this quarter we've clocked in the 60, across the 60 CR mark. When do we overall get back to the 2019 numbers? Any timelines can you share?
See, the whole business mix is changing. If you look at media as a proposition, I think what is more important to know is pre-COVID, there was a different relevance from a media and media consumption perspective. COVID has changed an entire lifestyle and way of consuming media and engagement as far as the consumers is concerned. So, coming back to your question, we are, today, from today's growth rate that we are showing, and if you put an average of 12, 14, 15% growth rate, mathematically that number is something which you will reach in about 2 to 3 years, depending on how well you will do on your future business perspectives. But if your question is directed towards revenues derived out of radio, then there is a challenge out there, because what has happened post-COVID is that the larger markets are still not, the high-yield markets as I call, have still not delivered the amount of revenues that it used to do pre-COVID, both from a volume perspective and even from a yield perspective, and that is a larger challenge the industry is grappling with.
But do you see the trajectory changing in the coming years, or do you see
it is changing. See, the thing is, I would look at this whole business from an opportunity as to, are you following the consumer journey and creating value for two of your most important constituents? One is your consumer, listeners, consumers, digital followers, and the other is your brand. So we are riding a journey in the consumer format and ensuring that we reach out to enough number of consumers, interestingly, for brands to come and engage with them. And that is, if you look at our last 2 years, we are moving in that direction. So that, I think it should be a line of thinking that we should look at, is that there is a progressive way forward.
Sure. My second question, sir, from a content strategy perspective, and as you rightly mentioned, we should follow the consumer, right? I think gone is that era where entertainment was the only content zone that people used to focus on. I think now 2 more pillars have been added. One is educational and the other is inspiration, right? And hence the rise of podcasts that have kind of literally proliferated in the coming age. Can you share some thoughts around how are we trying to address this market, or are we trying to address this market, especially the podcast era? So are we planning to create some new IPs in this space? If yes,
of course. In fact, very soon you will get to hear that we will be because as an organization we have huge amount of depository of audio content which is easily formatted as podcast content. And in the past, we have been syndicating content to third-party players. Today, we are looking at distributing it on our own with the amount of content that we have got. And you're right, apart from entertainment, motivation, a lot of do-it-yourself, finance, travel are subjects which are getting high traction from audio and podcast, and we are working on those categories, and those categories are being also built through our radio, on-air properties, and on our digital front. So yes, you will see the podcasts from our side being distributed on larger formats and larger platforms for consumers to get to hear our podcasts.
Sure. And if I can squeeze in one last question, it was great to see 100 million fan base across various social media platforms. Any thought around monetizing this 100 million fan base?
It is. In fact, the whole thought process is about monetizing your reach to the digital world and your radio. So for us, what we are today doing is we are giving a holistic combination to our brands. We are giving the brand the reach on radio, which is the large reach that we give through our Tier 2, Tier 3 city reach. We do a lot of experiential engagement on ground with the various events that we are doing. And lastly, given the fact that there is large amount of time spent on digital, we are combining all this and giving a holistic property, and hence the reach will only increase with the efforts that we are putting on content across social media platform. Our reach will only increase, and advertisers want that reach. Like for example, when we use a combination of influencers, both internal and external, there is a reach that those influencers bring onto the table, which the brand wants to engage with. So yes, we are monetizing it. Today if you look at our post, about 19 of posts we have done, a large part of that is coming from monetizing that reach that we are giving to the brands.
Sure. Appreciate the responses and wishing you all the best for the next quarter.
Thank you so much.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead.
Thank you for the opportunity, sir. Just wanted to understand, sir, going forward, how do you see your business over a period of 2 to 3 in terms of advertising, for, the content creation and social media? If you can give a rough idea in terms of how do you see the business, sir?
See, there are 3 parts to the whole. The growth of this organization is poised amongst the various parameters that we are working on. One is, of course, the core radio as a business that we are talking. Second is, of course, the difference that comes in with the on-ground activations and events that we do. And third is the digital foray of the organization. So slowly, right now we are at about 9% of our revenues coming from digital. That over a period of time will change from our percentage from 9 to 15 to 20 as life progresses. Our dependability on core radio will drop down from what that 80-85% today it is to 65-70%. And of course the newer formats of initiatives of revenue that we are doing, that all put together will take the organization forward. The mix, to my mind, will be a mix of radio, all other things which is on-ground, NFCT as we call, non-FCT revenues, and digital as a part of the whole advertising mix that we'll offer to brands, and the revenue mix will also be similar.
Okay, and sir, in terms of Jio TV, which you mentioned, so what is the revenue model, or how does it work out for the different tellers?
So right now, we are, like I told you, we are potentially reaching to the number of audiences that I have already told you. There are 2 ways of revenue model. One revenue model is, of course, through your channel, whatever reach you are developing, we can get brands to advertising like any other television ad happens in our audio video channel, right? So that is the reach, and we are guaranteeing reach and engagement in that particular channel of yours. Today, tomorrow, if we really want to go beyond the reach that your channel delivers on Jio TV, but you want to reach out to the larger Jio TV audience, with the Jio TV sales team, we can even get that reach brought to our brands through a single point access. So that is the opportunity that we are talking about. And here we are talking about data and numbers from a sheer consumer reach, what brands are actually looking out for. The other part is, of course, the creative way of giving solutions to clients, which begins with understanding the brand, creating the brand story, and creating a story around it, and disseminating it across various platforms for consumers to engage the same content in various mediums and give that whole combined media multiplier effect as an advertiser to brands.
Thank you, sir. So thank you very much, and all the best, sir. Thank you.
Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask question. The next question is from the line of Rishikesh from Robo Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. My question is with respect to the yield. So, sir, what was the yield?
May I request you to please use your handset?
Am I audible now?
Yes.
Now you are audible, yeah.
Yes.
Yeah, hi. So my question was with respect to the yield. So what were the radio yield for Q4, and what would be that compared to pre-COVID levels?
See, we will be around approximately around 85% of our pre-COVID levels yields, and that is, and the industry will be around 80-85%. So it's a challenge which I addressed because the larger markets are not firing, which contributes to a larger part of the yield, which is your core markets, metro markets, which is sub-optimally delivering for the industry.
Okay, got it. And what would be your EBITDA margin guidance for FY25 as well as FY26?
See, our operating margin has been around 15% for the year, and we should only improve from the current 15% depending on how the various efforts that we are putting from an efficiency to add up to the margins.
Okay. Thank you.
Okay.
Thank you. The next question is from the line of Rajiv Shah from Bright Securities. Please go ahead.
Thank you for the opportunity. I just had two questions. The first is, in Q4 FY24, revenue grew by 22%. So can you discuss on how much the government has contributed in that growth?
See, roughly around 8 to 9 crores of additional revenues would have come from government. So 62 crores is what we have done. If you take that thing off, we are still talking about our 53, 54 odd crores coming from the regular business.
Okay. So I had just one more question, that is, how is the demand for government advertising for the April to June quarter?
See, the April to June quarter will have a swell from a political part, but that has been muted for the reason that the political scenario has been different. But yes, the contribution of political will increase the first quarter results by next margin. But however, it would have been far more if it had been a regular election year from all parties advertising. But having said that, we are and we will be gunning for the numbers that we are looking at, irrespective of the political spending as much or not.
Okay, that was helpful. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Payal Shah from Billion Securities. Please go ahead.
Good afternoon. Thank you so much for the opportunity. I have two questions. Firstly, what are the new ideas you are implementing on the digital side and influencer marketing?
So two ideas. It's a continuous process to address your question. First is, of course, so far we have been effectively using our RJs as influencers, and now we are scaling up across the country. Earlier, what we used to do is to pick up the popular influencers from our RJs and use them. Now we are using RJs across the country, so that increases the probability of our revenues, number one. And from case to case, depending on the requirement of the brand, because we now seemingly understand influencer marketing ecosystem, we are also using external influencers depending on the brand's requirement and taking that as a package when we are giving to advertisers and making additional revenues out there. So that's the one part. The other is, of course, with the kind of content that we are creating, that since we are digitally focused now, there's a lot of increase of our efficiencies and content on Instagram, on FB, on YouTube, which will have one, of course, YouTube and all will give you the indirect revenues. The direct revenues will be clearly brand engagements that we create and the various content solutions with the brand that we do in each of the social media platforms.
Okay. So my next question is, have the ad rates come to pre-COVID level, or they are still recovering to the...
Yes, about 5 minutes back I replied the question saying that it is still at 85% of its yield levels. So it has not come to pre-COVID level, and it will take a while for that to come across, because it's something, like I said, it's an industry phenomenon right now.
Okay, that's quite helpful, sir. Thank you so much.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Ravi Shah from Opal Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. So I just had one question is on the GeoTV. Can you discuss this partnership in little detail and like what is the potential you can see from this business as a whole? And what are your plans for this going forward?
See, the potential is huge. Any advertiser who wants to reach out to a digital audience, I've shared the number that it is given. So obviously it is a digital reach that GeoTV brings in. What it gives us is that it gives us a newer format to engage with the consumers beyond conventional radio and social media platforms. So you are now also that present in a streaming platform. So yes, the potential is what we are right now navigating about from a digital reach to address that. From an opportunity perspective, we all know that in a landscape of 1,17,000 odd crores, 50% of revenues is digital. So advertising spent is on digital. So yes, that gives us the potential. Now, depending on what is performing from a product perspective on the channel, we will construct our revenue plans accordingly.
Understood, sir. Thank you, sir. That was a detailed answer. All the best, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to Mr. Ashit Kukenia for closing comments.
Thank you. We sincerely value your active participation in today's earnings call. Recognizing the evolving media consumption habits of the Indian audience influenced by the diverse range of content, options, presents an opportunity for the radio industry to integrate digital platforms while upholding radio as its primary business functions. Our continued focus is on propelling the digital landscape forward by utilizing resources and relationships to provide maximum value to our customers. The presentations, earnings release, and results are all available on the corporate website and stock exchanges. If you have any further inquiries, please get in touch with any one of us or with Strategic Growth Advisors or Investors Relation Partner. Thank you.
On behalf of Music Broadcast Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.